Welcome to another Trip Scott webcast from the floor of the New York Stock Exchange. I'm here with New York Stock Exchange Governor Steve Grasso, who's also been involved on this floor, more importantly, for some 30 or almost 30 years.
Oh,
I'm aging you, 25 years. 25.
Let's go with 20. I'm
20 years? 20?
Yeah.
Okay, 20 years.
How much gray?
Not as much as mine.
Right.
Not as much as mine. But we're here, and interesting, New York Stock Exchange bringing human touch to trading. Why is that important?
You know, people forget about that, but when you really get those days where the news is out there and it's streaming in and it's terrible news, people really want to hit that exit button, that sell button really quickly. And no one wants to show any size anymore. What I mean by that is no one wants to bid for stock anymore and show it out loud.
Right.
So you're more susceptible to a flash crash event where you see the stock market sell off.
Like we had a couple years ago.
Exactly. And you need human beings on the floor to receive that sell side, to be here to stabilize the market.
To stabilize the market and to protect who you're acting upon on their behalf.
Think about it this way. What about your retirement? What about my retirement funds? What about the average person out there, retail audience? What about the mom and pops that never even look at the marketplace? They don't want to open up their statements and see that they have half of what they once had in a matter of a day, not a matter of weeks and months.
So how's the New York Stock Exchange dealing with making sure that human touch remains as part of the market?
We've always had these quote-unquote trading curbs enacted on the floor, and we still have them now. Now we're rolling out its limit up, limit down, that sort of keeps a collar on the marketplace. So nothing can run way too much to the upside and nothing can smack a market down to the downside. So that's what we're doing. It's in a pilot program to be fully implemented in August.
Now some of our viewers, how do we make sure that they have confidence in the market? Because the key component in any marketplace, particularly this one, is confidence that their desires are going to be fulfilled.
I think you have to really trust the person that actually invest your money, and I think what the last couple of years has shown us that if you're not talking with that person on a daily basis, if you're just looking at his name at the bottom of your financial statement, that's not good enough. You need to really understand what you own, how much of it that you do own, and who's responsible for executing your trades, who's responsible for buying and selling what you own.
And how does the New York Stock Exchange, with respect to that transparency piece, bring added confidence in some of the protections it has? You talked about the collaring and whatnot, but in bringing that, talk to me a little bit about the difference between the NYSE and say the NASDAQ, which is almost fully mechanized.
Right where you're standing, and you can see the backdrop behind me. These are market makers, so they have accountability, which is something that the NASDAQ will say they have. But obviously, I can be anywhere. I just happen to be on the floor of the New York Stock Exchange, doing my job. Market makers, there's a sense of accountability where only he trades those stocks above his head.
Now, Steve, the goings on in Washington, we see ups and downs, and whatever the political mores of the day are. How does that impact the marketplace and the confidence?
Oh, that's hugely impactful. And over the last couple of years, what we've seen is people wanted to be agnostic when it came to their political views. They didn't care about who was in the public office, who was in the White House for that matter. And you know what? We have to trade and invest in every market, but you have to understand that Washington truly takes the lead. Rules and regulations, trading rules, we kind of curtail to them, not the other way around. So even something that interest rates, that's what's really keeping this market up right now.
Right.
So the housing market, that's what the recovery was based on. The banks, all of this is firmly implanted in DC.
So based upon the discussion around easing or the quantitative easing and the Fed tapering that, how is that going to impact the market?
Well, I've talked to a number of financial professionals, and everyone across the board feels there will be a sell-off. It's just a matter of how drastic will that sell-off be and how long will that sell-off continue once the chairman exits the marketplace.
And before he exits the marketplace, the market's been experiencing a bull market. And is the individual investor now too late to take advantage of that opportunity?
No, as long as, to your first question, as long as Ben Bernanke is still firmly here with the easy monetary policy, this market should have little dips here and there as we've seen. But what always happens with those dips, they're always bought. So as long as there's that underpinning below the marketplace with Chairman Bernanke with his foot firmly planted on the pedal, I think you'll be able to see a little more upside to this marketplace, or at least a sideways to upside market.
So our firm's clients who are small, large businesses, entrepreneur-based, the market confidence in the economy, where is it going to take us in the next 3 or 4 years for them?
Yeah, so that's a totally different issue.
Right.
Because what we have seen is confidence versus a market that's been moving higher. They're not built on the same thing.
Right.
So in your neighborhood, there's probably people that are still out of work. I know there is in my neighborhood. It's tough to get back to work. We still see the jobs front is atrocious. It's not acceptable by any standard. So I think we have a long way to go there, a long way to unify our country. And that is all about the market right now. So when you look at confidence, I think businesses have their work cut out for them. How about the healthcare plan?
How about it? I mean, my clients are not unclear. They're totally unclear about what the certainty around it is. Do they go above 50? Do they expand?
Right.
Do they try to go part-time? What strategies do they have?
I think that's
around
the
it?
point. Is what we're seeing is that a lot of franchises are purposely trying to stay below, even on that level. Small businesses, the franchises that are really big businesses as a whole, are trying to stay below or figure out ways they can get underneath that 50 employee guidelines. So it's going to be really hectic and it's going to be a rough slog ahead. But I don't think anybody could explain to you the healthcare plan right now. Even people that voted for the healthcare plan to implement it, I'm not sure they could explain what the true ramifications are going to be. So I understand how your clients and small businesses can say, do I put in that CapEx or should I just wait?
Right. Now, one other uncertainty is the tax code. So as an example, the CEO, Tim Cook of Apple, took the stand and testified in front of Congress, and essentially was nearly chastised, at least by some members, but how could Congress blame him?
Chastised for just doing what the law allowed him to do. Because, there's a perception. In the marketplace, I've always said this, it is about perception. If you believe the market's going higher and enough people do, the market will go higher. Against all fundamentals that say the opposite. So now if you have a CEO say, I'm just using the system that they created, they're blaming him. They want to point the finger. It's always easier to point the finger at him than it is at themselves. We need true tax policy. We need a whole revamping of the tax system.
If we were able to reform taxes and we were able to repatriate just the Apple's money alone that's currently in Ireland, as opposed to them borrowing, what would that mean to the economy?
Oh, it would be huge, and it wouldn't be. They like to call it. Some politicians like to call it a tax holiday. Why don't you just make it permanent? We all know the arguments. We even know the arguments with healthcare, how to make it easier, allow them to compete across state lines, do away with the mandates, bring these taxes home permanently, not just a tax holiday. You need to make it convenient. Money always follows the most accommodative path.
Do you see any flow from the Northeast to, let's say, South Florida or Florida? Generally speaking, have you seen any of those business activities? Because in Florida, we've seen some additional, like Hertz as an example, announced they were moving their corporate headquarters to Fort Myers.
Well, do the math. Even when you see residences, residential homes have been moving. The net recipients have been low or no tax states. So it will be the same case for corporations. So I would say that trend is probably going to pick up, not die down.
So that's on the state level with Tim Cook and Apple. That would be more international, but it's the same marketplace.
It's the same thing. Just magnify it. Times it by 1,000, and then you get your answers. But it's all the same thing. This is not tough politics. This is not tough math. This is very easy. Just have to make it more accommodating to the people that pay into the system.
On behalf of Trip Scott and all those involved, we want to thank the New York Stock Exchange for allowing us to film today. And we also want to thank our guest, Steve. Thank you. Thank you.